Hey guys, welcome back. So today we'll be going through what has been happening on the news, so a bit of market commentary. And basically, this is a new segment on this channel where we go through what's happening on the news, what are the use cases that we're seeing, what is the current state of adoption in the real world, and also at the end, I will suggest some coins that you might be interested in if you like what you're looking at on screen. So this came out a couple of days ago. Trading strategy partnership with Enzyme enhances on-chain asset management. So this sounds like it's to do with DeFi. And basically, it looks like they are building some sort of partnership to enable asset management on chain. So that sounds like it's to do with the DeFi space. And basically, we're not too interested in what this company is and who is Enzyme. And although I'm sure they're pretty interesting companies, we're more looking at taking a litmus test or sticking our finger up in the air and looking at what is happening publicly and trying to get a sense of the adoption of the actual solution. So it says here, basically, trading strategy has partnered with Enzyme to bring sophisticated algorithmic trading to DeFi and to evolve on-chain asset management. Enzyme users can now access sophisticated algorithmic trading strategies created by trading strategy expert Quant and strategy creator community through the Enzyme app. So basically, for this to even come into existence, I'm sure Trading Strategy and Enzyme have had a lot of conversations and they've said, look, we're getting a lot of clients who need this sort of thing. So we need to partner up and we need your services on our platform. And just the fact that they even had this conversation kind of means that there are clients who probably need this kind of capabilities, which means that they're getting clients in the first place. So that is very interesting to look at. And these sophisticated trading algorithms, I would suppose they are being used by more financial experts who come from the traditional space. Although I don't doubt there are some retail investors who use these sophisticated tools, I am pretty sure that there's the majority of, I guess, experts from the traditional space or use this more often. And because we are seeing this coming from the DeFi or coming into the DeFi space, it shows that there is some adoption or there is adoption coming from the traditional space, which is good to see. But we also want to understand, why are these traditional sophisticated investors coming into DeFi? What is the problems that DeFi solves for them, and why are they so interested in coming into this space? So taking a look at this deeper, we understand that the users of this new technology are professional quants. And I'm taking a guess here, but I guess professional quants usually work in hedge funds. And so to understand why they're so interested in DeFi, we need to understand what are the problems faced by hedge funds. So just looking at this article here, I've already read through it. I'm not a fast reader, but basically it says that hedge funds are expensive to set up. There's a lot of high managerial costs, a lot of legal costs, and unseen correlation. So what this all means basically is that hedge funds are expensive, and that means that for a normal investor like you or me to use hedge fund services, it's pretty expensive. I think I remember looking at something at a hedge fund, and basically like the minimum spend was like 20K or something like that. This makes it inaccessible for people like you and me. And basically for big hedge funds, that really isn't a problem. But for newer hedge funds where they need to get customers, they need to think outside of the box, some ways to cut down on these costs, but still offer services that are competitive in the market. And basically the reason why hedge funds have these costs is because of intermediaries. So there's a bunch of different intermediaries, which they all have their own function within asset management. But because they are all their own sort of companies, so because they do not operate on a transparent manner, there's a lot of reconciliation between these companies. So reconciliation just means like checking what actually happened and whether that information is actually reflected in each other. So because they have to do all this reconciliation, that adds up on the cost, and that is how they currently do it. So a lot of the problem is coming from all these intermediaries. And what blockchain allows you to do is to still carry out, it allows you to still have the capabilities of all these intermediaries, but without the need to do the reconciliation. And because you don't need that, it cuts down on the costs. And the reason why you don't need to do that reconciliation is because blockchain is a transparent ledger. So everything is transparent and everyone can, or the different organizations can see what each other is doing. So this is basically the value proposition of DeFi. It gets rid of those, or the need for those intermediaries. And also because we've seen a lot of high returns from DeFi. And that just adds to the kind of the reason why hedge funds might want to get involved in this market. And basically, to summarize, DeFi brings a number of advantages. No central authority controls the flow of funds. It makes it more secure, less prone to corruption. It's open source. Anyone can participate. It's borderless, can be used anywhere, anytime. The markets are 24/7. Basically, there's no having to wait for market open on Monday or having to wake up at a specific time. DeFi is trustless because it's basically transparent, decentralized. You don't have to trust any party with your funds because all the funds are actually stored on blockchain. And also it's fast. So with blockchain, payment and settlement is one of the same. But in the traditional world, payment and settlement are like two different things. You might pay for something, but that payment might not actually settle until a later time. And that adds to the inefficiencies of the traditional space. And just going back to the value proposition. So we know that it's more efficient with blockchain, but also we see the returns here of hedge funds who have gotten involved in crypto-related strategies. And we can see that the average return is very high. So these are just insanely high numbers. And for those of you that don't know what a normal non-crypto hedge fund returns are, you can, in the traditional space, you can expect something around 9.75%. So this is much higher. So obviously it's very attractive for hedge funds getting into the space and also investors as well. Okay, so we know that there's a value proposition, but how big is this market? The market is huge. The asset management industry is $1 trillion machine, $100 trillion machine, excuse me. And with blockchain, we want to know that basically the scope of the use case is big enough for it to actually make sense. If it is not big enough, then using blockchain is overkill. It's if you had to mow a lawn and you use like a Bugatti Veyron engined lawnmower to mow one person's lawn. But if you had to mow the lawn of, I don't know, every country in the world, then you probably want some crazy lawnmower which has all the whatever you would want in a lawnmower, basically, to do that kind of scale. So blockchain is more, you want to look for things which have a massive scope. And we can see that here with the asset management industry. So moving on, the next thing that we want to look for is that blockchain is this new technology. We want to see that there is some powerful organizations involved that are driving the use of this technology. There can be a small company which does it. If we're talking about mass adoption, and if we're investing in a project, we want to see that there's some big organization that is driving that, because it's like a language. If there's only 2 people that speak language A as opposed to 300 people speaking language B, then it makes more sense to learn language B because you can talk to 300 people. So that's the concept I'm talking about here. So we want to see that there's some kind of large organization involved. And this large organization involved in asset management here is R3. This is, I think it started out as a consortium of very big banks: Goldman Sachs, JP Morgan, Credit Suisse, Barclays, Commonwealth Bank of Australia, State Street, RBS. Like pretty much every big bank you could think of is in this consortium. And R3 Corda is the blockchain technology that they're all building on. So just looking at R3 Corda deeper here, you can see there's already a bunch of different consortiums which use R3 Corda. So Marco Polo, I believe that's a logistics network. B3I, I believe that is finance, but I'm not too sure. Voltron, I believe that's finance as well. But anyway, my point is that R3 Corda is a very large consortium. We can see here as well, these are all the little partners or big partners that are adopting this blockchain technology. So things are looking good for DeFi. We've seen that there is a clear value proposition. There is a big sort of organization that is driving usage. And because they are driving usage, they make the benefits observable for other people to join. And when the benefits are observable, that puts pressure on new organizations to adopt that technology. So just looking at this article here, basically the DeFi Decentralized Finance protocol surged to new all-time highs of 157 billion this month, according to DeFi Llama. Institutional capital has been flooding into DeFi. Still the early days, but capital influx. Profile of institutions investing in DeFi. We can see that there is adoption of this sort of DeFi, this new DeFi ecosystem, which is really good to see for DeFi. Just looking at another article here, just more adoption of DeFi. Substantial 81% of respondents acknowledged a growing allure in DeFi investment opportunities. Notably, wealth managers and pension funds stand out, with 47% expressing the belief that wealth managers' investment levels will significantly rise. 46% share the same sentiment about pension funds. Expected to follow suit are sovereign wealth funds and hedge funds, with 37% and 34%. Moreover, family offices project a notable surge, with 30% foreseeing a substantial rise in their DeFi investments. As the financial sector adapts to the changing landscape, the reconciliation of innovation with compliance emerges as a pivotal theme shaping the trajectory of decentralized finance. So this is all to say that DeFi is becoming the future of finance, I would say. Just looking at these articles, definitely for new hedge funds, DeFi is the future. And even established hedge funds, they're also getting into space. They can see the benefits of making their whole operation, back office operations, more efficient. It provides them a new sort of blue ocean to compete in. So you see, it says here, red ocean strategy, bloodbath. Whereas a blue ocean, there's less competition. It's still in the land grab phase in DeFi. So just looking at all that we have seen, I think we want to try and put DeFi somewhere on here. I definitely don't think it's in late mass or late majority yet. I think it's probably past innovators. And I would say it's somewhere between early adopters and early majority. I say that because for the early majority to join, the early majority usually looks for very clear benefits for adopting the technology. And I would say that we're just seeing that now becoming more and more apparent with each week that goes by. We're seeing the big banks use R3 Corda. We're seeing all these articles around how more efficient it is. We've seen the PwC report there on the returns of hedge funds in crypto. We've seen anecdotes from different directors in those financial institutions saying, yeah, we think fund managers will be getting in more and more involved. So I'd probably say, yeah, we're probably crossing the chasm now with DeFi. So this is, what do you do with this information? I guess it's interesting just to know where we are in terms of the whole ecosystem, because if we can invest in something here, obviously we have all this to gain in our investments. But it's also nice to invest in something here as well, because you know that it's already being adopted and you feel a bit less risky when investing in those sort of projects. I would say DeFi is one of those things. I think it's the benefits of DeFi are clear. It's actually solving a problem in the real world. So yeah, I'd say we're just crossing the chasm now with DeFi. The one thing though, I think that is holding the majority back is definitely regulations. A lot of the regulations now, we see that they are not so applicable to DeFi. A lot of the regulators we've seen with the SEC and all the stuff that's been happening recently with Sam Bankman-Fried and all the Terra Luna breakdown, and just what we've been seeing is that a lot of the current regulations, the regulators try to apply those regulations to DeFi, but they're not. DeFi is such a new kind of paradigm that a lot of the old things don't particularly apply. So we're seeing a lot of changes in the regulatory space, which is good to see. And I think once we get clear regulations, then we'll get even more adoption into DeFi. But I think just regulations are very slow moving. There has to be, I think, some reason for them to even change the regulations. And I think we're seeing that now with DeFi, that there is a clear use for it and more people are using it. So that means regulators have to come in and make sure everything is okay. And I think we're seeing that slowly, but it takes a long time, I think, for regulations to get clear. I don't think it's ever it's just an ongoing process, basically. But we're seeing that now with DeFi. I think in the finance space, we are seeing more of the regulators' attention, especially in DeFi. But if you compare it to other spaces in blockchain, like supply chain and art and IoT and stuff like that, I'm not too sure what is happening there in terms of regulation, but all I can see about regulation now is to do with finance. And I think that is coming from this whole DeFi and financial changes that are coming from blockchain. Okay, so we know that DeFi is legit. We see big organizations adopting it. We know that it's being adopted in a big way. Regulations are still holding back. So if you like the sound of that, let me suggest some coins to look at deeper. Let's call this coin inspo, maybe. So the first one is Chainlink. Chainlink is being used by banks as a way to do real-world asset tokenization. Real-world tokenization or real-world asset tokenization is a term basically used to describe how real-world assets like houses, stocks, bonds, any type of financial asset, and puts it onto the blockchain. And what that does is it lets you build programmability into those assets more than you could have done if they weren't on the blockchain. So they become digital and they let you do all kinds of things like automation and doing like smart contracts where something pays out. If X happens, then Y pays out. And it lets you do it in a very real-time, efficient way. And Chainlink is basically, they're building the infrastructure for financial institutions to do that. So Chainlink is my first kind of coin to look at. They're a large cap cryptocurrency. They do interoperability as well. They've been in the space for a couple of years now. And yeah, I would say just give Chainlink a deeper look. They're a very interesting company. And yeah, I don't think I can cover all of it in this video here, but that's my first sort of coin inspo to look at. The second coin inspo is Centrifuge. They are low cap, under $1 billion. Basically, if I say low cap, it's under $1 billion coin. They're a Polkadot based coin. They basically do the same thing as Chainlink. Not exactly the same thing, but they focus on real world asset tokenization. A reason why you would want to look at this coin as opposed to Chainlink is because obviously they're lower cap. So if you invest in this and they grow, you could probably you might your gains would be more than Chainlink. Yeah, they do the same thing. They use different technology. They're Polkadot based. They serve institutions. They have different documentation and tools for developers to build on. So it may be that a hedge fund that likes the look of Polkadot based technology more, they might want to use Centrifuge to build all their new DeFi capabilities on. So yeah, give Centrifuge a look if you like the look of that. And yeah, say that is it for today. I didn't know how today would go, but I'm trying this new kind of format for my channel just to get more videos out. Just let me know what you think of this format. I still will be making the more in-depth videos. I'll aim for weekly on those, but I wanted to get small videos out just to make it easier for myself to make content, basically. But yeah, thank you very much for listening, and I'll see you later.